I want us to develop during mortality. For he who is faithful and wise in time is accounted worthy to inherit the mansions prepared for him of my Father.
Yeah. So he wants us to develop that skill. So let's talk a little bit about what we've done so far. Again, first thing we did was budgets. So we spent a couple of days talking about budgets, and you guys are all recording your information. The budget really is three parts. It's a budget column, which is what you think you're going to spend. It's an income and expense statement, or an income statement column, which says what you spent. And then your revenue and income and expense log is just all your individual expenses. So and the reason we do this, we want to know where we are financially. You have to know where you are now before you can decide where you want to go. And so one of the things that we're going to be talking about today is we're going to be working on the balance sheets. And then on Monday, we're going to start talking about ratios. And then next week, we start doing time value of money, which is financial calculations, which is something that's really important. So in each of these things, personal balance sheets, personal income and expense statement, again, your income statement is actually in your budget. It's the second column of your budget. So, question, why do we keep good, not just good records, but good financial records? Because you can keep tracking your progress. Sister Sudweeks and I, with our Quick, and we can go back over the last 30 years and we can see our net worth every month for the last 30 years. Not that we need to, but it does help us. It's been interesting the last 5 years. We've been missionaries, and so instead of earning money, we've been paying money. And just because of our investments and the financial markets have been good, we've spent less than we've earned on our investments, and so our net worth is actually increasing, even though we've been spending money for the last 5 years as missionaries. So, principles for keeping records: understand yourself, receive, act on the Spirit's guidance. And we want to keep good records, saving, income, spending. But it's nice, as we talked about on Wednesday, also for planning purposes as well. These records can help us plan for the future. And ideally, what we want to do, we want to be a wiser steward. Wiser steward over the resources Heavenly Father has blessed us with. Key records, we've already talked about these. Which of these top three, which of these is forward-looking, which is backward-looking, and which is at a point in time? A budget, is that forward-looking, backward-looking, or at a point in time? Forward-looking, yeah. So this is what we're trying to do. This is what we're going to spend for the next year, or the next week, or the next month. Balance sheet, forward-looking, backward-looking, or a point in time? Point in time. So we're going to do a balance sheet today as of January 24th, 2025.
And this is one of the quiz questions. The balance sheet is a snapshot of your finances in a point in time of your.
Okay. So now you only have 9 questions you have to know.
The balance sheet's a snapshot.
Has anyone already taken the quiz? Is it easy? Yeah. Okay. So
I hope so.
So realize if you have questions, you come and talk to us. It's okay. And then income statement. Forward-looking, backward-looking, or point in time? It's backward-looking because it's for your income statement for the last 30 days or the last year, things like that. So, and all of these together help us to see where we are financially. It's really important as you calculate these things, you need to make sure you calculate them correctly. And we don't want to see you guys cheated either. So that's why it's really important that we calculate these things correctly. So someone tell me, what's a personal balance sheet? Personal means it's ours. Yeah. So it's a snapshot of the things you own that have value and the things that you owe.
Own and owe.
Yeah. And then the net worth is just the difference, those. If you have a net worth of $5,000, does that mean you can go out and spend that $5,000? No, because many of those assets are illiquid. It takes time. So, for example, you have a house or a car. It takes time to sell those assets. Typical college students, negative net worth. When I was in your shoes, I had negative net worth. So realize that that's a situation to be in. How about if there was someone, for a student, that's not a bad balance sheet. How about for someone my age? One of the OGC, the Old Geezers Club. That would not be a good balance sheet for someone in my age. So a good balance sheet will change depending on your age and your stage in life. So we divide assets into about 7 different categories. And each of these, what we want to do is we want to get a rough idea. A balance sheet is not an exact thing to the sense. We're getting a rough idea of the value of the assets. So the first one is current or monetary assets. Anything that can easily be converted to cash within 12 months is considered a current asset. So things like savings account, checking account, things like that. Your current assets give you liquidity in case of emergency. So this would be what your emergency fund is based in. So it's reported at your current or market value. Then you have investment assets, stocks, bonds, mutual funds, index funds, ETFs, things like these. Again, these are used to accumulate wealth, so to satisfy future goals. Again, these are reported at your current value or the market value. So I can pull up an app on my phone and I can say, okay, SWPPX, which is a mutual fund, it's at $93.97. So I can actually see. So that's the current value of that. So investment assets, again, reported at your current or market value. Then you have retirement plans, which are very similar to investment assets, but these are saved for retirement.
I think you just copied like what was
So Sister Sedgwick and I, since we're retired, certain retirement plans, you cannot access them until age 59 and a half. If you take it out before age 59 and a half, you pay a 10% penalty and it all becomes ordinary income. So those are the penalties. So retirement assets have to be managed a little bit differently. And again, reported at your current or market value. And then housing, land, dwellings, rental properties. Again, used for personal goals or maybe accumulation too. Now these are reported, retirement plans, those are easy to value. Because you can just go look at the market and say, okay, look at the financial markets and say, hey, what did it close at? It's a lot more difficult with housing. And so what housing you have to do is you have to come up with what's the appraised value. Oftentimes you'll actually have to pay money to get the appraised value. And then automobiles and other vehicles. Again, what happens the minute you drive a new car off the lot? It drops by about 30%. Depending on the vehicle.
Did you submit that?
And every year the value of your car drops.
Did you
And
submit
so
it online?
what you do is report it. Blue Book, in the US there's a thing called Kelley Blue Book, which was one of the first ones to come out. And what it does, it allows you to value different vehicles with different options. You could actually go to kbb.com, you can put in your vehicle, you can put it in the options, put it, and it'll actually tell you what that is. For us, if you've got a vehicle, here, you just put in roughly what you think it's worth. We're not too worried about being too exact on these things. Then we have personal property and other assets. These are depreciating assets.
You have a question, right?
Oh yeah, question.
Should a house be considered liability or asset?
Well, there's 2 parts to the balance sheet. So the question is, how much do you owe on it? So it'll definitely considered an asset, and if you owe money on it, it's considered a liability too.
So if you have it paid off, then it's a really good asset. But if you own a house that's $200,000 and you still owe $150,000 on it, it's
It's a liability.
yeah.
So ideally what you want to do is you want to reduce your liabilities. And ideally you want to get to retirement without owing anything on your house. So a lot of people, they turn age 65 and they still owe 20 years on their house, and that's not a good way to be in retirement. So what you want to do is you want to have those things at your house and other things paid off by the time you hit retirement. Businesses, collections. reported at fair market value, but normally depreciates. What about clothing and things like that? I take, okay, what did I pay for it? So if I paid $100 for it, it's worth about $3, just because those things depreciate so quickly.
You can write. You can, yeah. Sorry.
Okay. So those are our assets, about 7 different categories. Again, what we're trying to do is trying to get a rough value of the assets. So we can add up all of our assets, all of these pieces, our current assets and our investment and our retirement, property, housing, things like that. Liabilities come in 2 major forms. First one is your current liabilities. These are liabilities that you can pay off within the next year. Ideally, credit cards, you should pay them off every month. And then you have what we call long-term liabilities, liabilities that extend beyond a year. Those are things like student loans, auto loans, home mortgage, consumer loans, credit cards that you don't pay off every month. Again, all of these are all reported at the current amount. So what does your balance sheet show? So the balance sheet shows us how well you're living. It shows, is your net worth growing? That's a good sign. Again, with your balance sheet, it's the trend that's important. Are you reaching your goals, your savings and other goals? Do you have an emergency fund? Do you have adequate liquidity when problems come up? Are you saving for retirement and other financial goals? And if you can answer yes to the above, then you're healthy. So let's build a balance sheet. So do you owe more than you own? Again, you're insolvent. It's okay, because students are insolvent. When I was in your shoes, we were both insolvent. And what's a good level of net worth? It depends on your age and where you are. Again, a student's net worth would not be good for someone like Sister Sedgwick's and I.